to the TMT stock market strategy video for Tuesday, May 17th. Nice little pop in the markets because Apple and Warren Buffett are now tied to the hip. Warren Buffett took a big stake in Apple, and everybody goes crazy thinking that the markets are now headed higher again. Well, I think that's crazy even to think. Remember, guys, something like that when they buy a stake in Apple, I don't think that would be a real good reason to keep buying stocks all day long yesterday. And most of it was all retail because the volume was not anything what it should have been if the institutions were participating in it. So when you get news like that, it's usually all retail. Take it with a very big grain of salt, and let's move on. Anyway, I want to show you where we are here. McClellan Oscillator, reading negative 17, and that's fine. You know what? It's not a big deal. What is that telling us? That's telling us that we are basically in a neutral state in the markets at the moment, and we can go anywhere. We can run up and before we're overbought, and we can sell off pretty hard before we're oversold. So plenty of room to run before we get extremely overbought or oversold in the very short term, okay? Obviously, in the longer term picture, we're extremely overbought. Not a sell signal, but something that you need to take note of. Yesterday, I pointed out about the banks, the BKX, Citibank, JP Morgan. Watch the yield here. This is what I was showing you. This yield broke down from this bear flag. You could see this little pattern here broke down. That the banks don't do well coming into seasonal weakness. So keep an eye on Citibank, JP Morgan, Wells Fargo, the big guys. They're going to have a problem if this yield continues to just kind of roll down here a little bit. But not looking too good. I just wanted to point out the yield to you guys. Now, let's look at some volatility. This is what's making me nervous here is, especially when you're at market tops, I showed this to you before, where you notice how the ATR is starting to rise here, and where are we? We're starting to kind of, move a little bit lower. Remember that head and shoulders pattern that I showed you right up in here? We haven't broke, but we're at the neckline right now. And again, I mentioned yesterday, there's so many people now starting to talk about this head and shoulders. You got to be very careful. If it did break lower, it could break back up to the upside because there's so many people now talking about it. Mostly the pundits on CNBC, Fox Business News, all over the internet. So you got to be very, very careful with that, okay? But this is something that is a concern, and it's something that should be noted. All right, let's take a look at the VXX. Nice big bullish fallen wedge. I count 4 waves, so we need one more wave down, which would conclude 5 waves in a bullish fallen wedge or any type of wedge pattern, whether it be bearish or bullish. So I'm thinking right to the end of this area here, and then we probably explode out of here. So that's another concern of mine for the long trade. I'm pretty much giving it another week or so right after, if we can get out of right after options expiration monthlies, which usually are a bullish week, I'm going to see how this thing works for the going into next week and the week after. And if that's the case, I'm probably going to call a market top, a short-term market top in equities. And again, we'll see a little more evidence in price. Here's the UUP, the dollar ETF. And again, if you're trading crude oil, gold, or any type of grains, commodities, meats, you got to be careful because you see what happens with the dollar. Dollar rises, they actually go the opposite way. Okay, it's inversely correlated. So just something to keep an eye on. All right, so let's run into the indexes here. This is our main guy right here, the transports. All right, this is deemed our leader. You have to be careful. I pointed out an M-top formation. We broke that neckline 2 days ago on Friday. Target's 127.17. That's 50% of this move, which is pretty much in line to say that if this move we were to pull back, giving back 50% of the move is healthy for the markets. I mean, you start testing the lows and breaking down, then you have a bigger problem here. But right now, I'm looking at 127.17 in the transportation sector. So it is breaking down again, not looking too good for the bulls. Spiders, and then again, we mentioned about that head and shoulders. You can see clearly, guys, that we have momentum indicators rolling over, okay, from the highs here. Nice identifiable head and shoulders pattern. Neckline right here needs to breach that. That's 204, just about 204.20. And then we have the 200-day moving average, which is 203.10. Target is 196. Okay, that's on the daily chart of the spiders. All right. Next, let's take a look at the 60-minute. And of course, we already identified these two patterns. I like to keep them out here until they start to break down or break up. And here's that bullish falling wedge that we mentioned. We had a nice 3-day rally, and now we sold off. These were those targets I was telling you about. Now we're back again here. And we need to really get. I like to see us get back below 206.16, and then once we get back below that 200 period, then I think we test the lows. But again, anything can happen this week because it is options monthly expiration. Okay, here is the IWM deemed our secondary leader, and you could see here same thing. You could see a head and shoulders pattern here. You could see that left shoulder and then the right shoulder, and the neckline comes in easily right around here. We did break down. We got back above it again, but still holding that downtrend line. Again, you could see these indices are starting to break down here, guys. This is not a good sign, right? So just because we have one day up because of Apple, be very careful. I mean, this is, Warren Buffett, he's long just about every stock there is, and he wants this market to stay up. So he's very, very nervous, very nervous. So it's something that everybody likes to what we call quote unquote talk our book up, our trading account. And Warren Buffett makes moves so he can hold up his portfolio as well. Not that Apple's not going to be a great investment down the road, but I think you see I think you see low 80s before you see 90s. So, and remember, Buffett bought Apple probably about 2-3 months ago and into the fourth quarter. Excuse me, into the first quarter. So that reporting is a little bit behind and lagging. So you really don't want to follow these whales, especially when they're 2-3 months out behind what you when you get the report. Daily diamonds, you can see here, kind of just meandering around. We got this horizontal trend line resistance. Keep an eye on that 50-day moving average, and then of course these highs here at 180. Okay, we'll see if this thing starts to break up or break down. But it is a lagging index. I don't pay too much attention or give too much importance of that index. Q's daily. Okay, of course a big move. Apple broke up into that. Now we still got big resistance. We have confluence area resistance here, 106.82, 107.68. So just keep that in mind. This is really where that target is. That first target will be 102.70. All right, guys. So pretty much it's pretty much quiet other than that move yesterday that we had. It's going to be very interesting. We have a lot of data coming out at 8:30 and 9:15. We'll see what happens with this market. But again, I am looking for maybe a couple of a down day or two up, but settling up on the week, and then next week and the week after is going to be a telling sign of what's to come in the markets. Have a great day. We'll talk to you tomorrow. Take care.